Good morning, everyone. This is Brad Matheny. Today is the 3rd of December. It is Tuesday, and we are looking at, yep, I know, using my, okay, we are looking at a pattern. Now, I have to rely on yesterday's SPY and gold cycle patterns because Excel is not updating prices today. Comes up with some connect error. I just checked it out. Some kind of a connection issue going on with Excel. Hopefully that resolves itself quickly, but it's beyond my control. Looks like it's on their end. I think Windows just did some update and it showed up. So without pricing, we can't get the trending indicators, and that's going to leave a bit of a problem. We don't also get these carryovers and what have yous. So we're looking at a gap reversal pattern in counter trend mode. It is very likely that we are going to get some sort of a gap reversal pattern in counter trend mode, meaning that we could end up getting, in my opinion, some sort of a spread this out, a go to 2 hour. So here we are with the data right now. Bring to front, visual order. We could end up getting some type of a move like this down and up into this 606, 605 area. And I think that's going to be our first level of resistance moving forward. So, really, I'm looking for this continued move up to about 605. Whoops. And then continuing to try to push higher, possibly into the 613, 614 area for the SPY. And that's going to carry over for the NQ or the QQQs in the sense that we have this rally. Let's go back to daily. You can see we have this rally taking place. You can see the height to which we've actually gotten yesterday. Remember, I was indicating that we were still very weak on the NASDAQ before yesterday. But again, that breakaway move on the SPY prompted a big rally phase on the NASDAQ. And again, we're about ready to break above this ultimate high level. If we get above this ultimate high level on the NASDAQ, which as of today, we're slightly below that level, we're going to see this turn into a bullish trend. So when we get above here, we get above this level right here. Oops, let's try that again. We get anywhere above this ultimate high level on a confirmed rally phase. The excess phase peak pattern here, this pullback and flagging formation is going to be done, and we are going to move into bullish trending, trying to get higher. So this is, again, it's mechanical. We do not have to really think it's either A or B. It either rolls over and heads down to confirm the pattern, or it invalidates by rolling higher. It's very simple. So understand that the pullback flag or pullback mode here is the initial downward trend in a bullish pattern. The flagging pattern here is actually an upward trend. So this is what you need to understand, is that we could have been trading, should have been expecting this to roll. Then eventually it rolls into a downward trend to continue, or invalidates by continuing upward and breaking above that ultimate high level. So right now we're very close to breaking the ultimate high on the QQQ, which is kind of interesting because we've gotten into this rally phase, right? So let me get rid of some of these lines and explain to you why I find this interesting. I find this interesting that we're rallying the way we are right now because look over here at the crash index. So the crash index has started moving downward. Not a lot, but it started moving downward, indicating that we have kind of reached the peak of, let's call it the exuberance. So, not to use a Janet Yellen term, but we have reached the peak of the post Trump election kind of exuberant rally. We've come back up off of these levels. We've started rolling back down. So I started looking for a few examples here of this type of a roll where we get a rally and then a peak and then come back down. Okay, here's the dollar, here's the SPY, and you can see as we roll into this exuberant phase like this, move this out of the way, you can see that the dollar rallies through this cycle and rolls over. The SPY rallies through this cycle and then rolls over. And gold rallies through this area and then rolls over sideways. Okay, so now do we have this exact same type of setup? Rolling up through here and then rolling over? Possibly. Here's our rally in the dollar. Here's our rally in the SPY. And of course, gold through the election kind of collapsed through this move and through this rotation. Remember, this is daily. So now we're looking at this collapse in gold as a kind of a panic collapse, possibly rolling quite a bit higher. I think that gold is still going to continue to move higher after this panic move. It's just going to depend on how far the dollar collapses. Now, I do expect the dollar to end up back in this 104 area. So I think we're going to see the dollar move back down in this 104, 105 area, which would be very good for gold. But again, it's just very interesting, in my opinion, that we're seeing this rollover of the crash index, which to me says that the exuberant buying mode is over or becoming an end factor. So we need to be aware that, before Christmas, if we were to get a fairly solid breakdown of this crash index, I think we could see this gap filled. I think we could see the dollar come down to this 103, 104 area. I think we could see the SPY still, we drag this back a bit, still move down into this, 580, 585 area on a pullback, which is essentially a moderate pullback. And I think gold is going to try to move up to 2850 plus on a recovery rally. So it's kind of interesting how the markets are settling in right now, because the QQQs and the SPY are moving much higher. Okay, they're breaking out. I believe the QQQs will break out today. And I think this comes into safety. What you're seeing is a move to safety. So the Qs and the SPY are essentially the strongest. And it goes back to what I was telling you guys a month plus ago, that the US markets are a beast. Really, they are just a beast right now. The stronger Fed rate is going to continue to put pressure on global markets. The stronger US dollar is going to put pressure on global currencies. A new Trump presidency is going to likely change dynamics quite a bit. If those dynamics continue to push for a strong and dynamic US economy through austerity and new policy measures, the US markets and the US dollar and the US central banks are going to continue to act in what I call a predatory Fed mode, which is going to put pressure on the global markets, extreme pressure maybe on the global markets. And what we're going to be looking for is the QQQs, the SPY, to continue to rally until they stall. And where we're looking at a potential stall is probably going to be after Q1 2025, in my opinion. We could get these little rotations, like I was telling you, the SPY. I'm going to go back to the SPY. Let's say we went back to, we had a pullback, and let's say we rolled up here into this area like this, rolling all the way up to 5 or to 610, 611, and rolled back down into 588. There's our rolling downward. Not the end of the world, guys. That's a 3.5% pullback. Not the end of the world. That is a typical pullback. In fact, you can see I've drawn it kind of already out here in my green level. So we would rally up potentially and then roll back down to the 588 area, maybe into this area. That would be very reasonable to me through the end of the year. Okay. And this may become my anomaly event setup. We will see. Okay. It's a matter of time to see if this actually happens or not. We're currently bullish. We're looking at new highs. Same thing with the QQQ. We're about ready to shift into bullish trending. We just got to get above this high level on a confirmed close. If we reject at this level and come down, then there's still a pretty good chance we're going to see a downward movement. If we get above this level on a confirmed high, that level is 515.70. If we get above that level on a confirmed close to the upside, then we are going higher. That's a simple rule of the excess phase peak pattern and the Elliott or the Fibonacci price theory. So you can see we've already got, literally I can go through detail, but we already got a little high here. We've closed above it. We've got a little high here, a little standout high. Looks like we've closed above it as of yesterday. We just need to get above this one level right here, 515.70, let's call it. And if we get above that on a confirmed close, then we're off to the races, to the upside. And we would be looking potentially for, as I showed you earlier, some type of rolling pattern. Come on. Some type of rolling pattern over here, some type of a move up into this area, and then maybe a pullback here, and then some sort of a move like this. So that's kind of where we're at. Now, gold and silver. Let's take a look at this. Silver was rolling to the upside. Last I just looked before I started these videos. Pretty interesting move in the sense that silver continues to rally, and I'm gonna show you here. It rallies, it sets a high, pulls back, rallies above that high, stalls, sets a high, pulls back, rally above that high, stalls. Okay. I think that we're moving into a very solid basing pattern here. And if we can see silver really get above this level, this 3160, as I mentioned earlier, I think that's going to be key to watching gold move above this level. But the fact that silver is pushing to a new high right now, where gold is consolidating down into a sideways flagging formation, you can see here that we're getting kind of this extended flagging in gold like this that is kind of stalling out. And if we take a look at this, A, B, C, D, so we're looking at kind of a move like this, a rolling and then rally. And here in silver, it looks like we are moving up into a consolidated upward type of a flag, a little bit like this. And what we're looking at here is flag apexing here. So we come down 1, 2, 3, 4, 5. Yeah, we're getting ready, very close to the breakout here. If I do this correctly, we see this downward move coming back here. We get the flag. We roll up into consolidation, which is right across here. And then we would break up to the ultimate high, which could be a pretty good size move. So again, this flagging formation looks very interesting in gold and silver. I don't recommend traders, get overly aggressive still. I'm still at that holding into 80 to 85% cash right now because of this volatility and because of what we're seeing here. We're seeing this rollover in the crash index. We're seeing a push higher into the post-election mode. Remember, the elections were right here. So pay attention to the fact that these were the night of the election right there. And what we're looking at here, guys, is yeah, it's a pretty good move. I mean, let's think about it. How much of the Qs moved since before the election? We look at the highs here to the highs here. We've moved up 3%. Okay, not 10%, not 20%. It's not a big move. It is a 3% upside move. And granted, a month, that's a pretty good number. but it's not huge. It's not massive. I think the real growth comes here in the Q1, and that's where I'm trying to tell you guys. I think we're going to be looking at some rotation into the end of the year. Then we get into this growth phase in Q1 here, which again plays out right over in this area. I think we're going to be looking at some growth opportunity here in Q1, not down here at the end of this year. I think we're going to get a lot of what I will call curveballs from Washington, D.C., and kind of like we had the other day with, Biden pardoning his son. I'm not saying I agree or disagree with it. I mean, I think any father would take that action for their son, given, the life that Hunter Biden has had and the fact that he's trying to get his life together. I think that maybe there were some other issues involved, but I think President Biden is at the end of his term here is kind of like, look, I'm going to take care of myself and my family. I've done my job, and that's why I think we could get some curveballs. I don't think that, just like with Hillary, I don't think that they planned on Hillary losing. I don't think that they planned on Kamala Harris losing. So I think we could be looking at some curveballs over the next month and a half or so before the inauguration. And that's why I think this whole period, and this is my personal opinion, but I think this whole period, roughly from where we're at post election here, all the way into the inauguration, which is here, I think this whole range right here is going to be full of curveballs, which is why I'm telling everyone to stay protected, trade smaller amounts of money. Just don't worry about it, because I don't know what these curveballs are going to look like. I was reading that the Democrats are trying to get Biden to pass some bill to limit the use of the National Guard, which has been the function of the president for hundreds of years, to be able to, he's the commander in chief. Why do they want to stop the commander in chief from using the military when necessary? All I can say is I think they're really running scared right now. And I don't know why. I don't have any reason why yet, but it just makes sense that they're running scared. And I did read another article and comments that indicated that Biden could resign. He could execute whatever he wants, resign, transfer power to Kamala Harris. Kamala Harris could then pardon Biden for the crimes that he committed, potentially, like he did with Hunter Biden, kind of a blanket pardon, everything from 2000 to 2029 or whatever. And boy, wouldn't that send a shockwave through the globe? I mean, this is we live in unprecedented times. And I think that's why you need to stay cautious. It looks like everything is ripping, but no, we're not quite there yet. We need to stay very cautious through this time frame. And just remember that, you heard it here. Others might be telling you to go all in, but if you're a skilled trader and you want to protect your capital, you're going to learn really quickly how important it is to sometimes be cautious and wait out the markets. Okay, lastly, we're going to come over here. We're going to take a look at Bitcoin. Nice thing about this chart here is this should be a fairly blank chart. Look at where we're at on Bitcoin. We are rolling up. So I can draw real quickly the excess phase peak pattern coming up, moving into a bit of a flag. You can see that pretty clearly, right? We would have to get below this level here on a breakdown, moving into the consolidation phase, possibly moving down into the ultimate low phase. Alternately, we could end up moving into a deeper flag. So we could end up coming into this phase, coming down here, moving into a bigger, broader flagging formation here. And this would be not uncommon. So understand that where we're at with this move is, as long as we stay below this high right now, we are in the excess phase peak pattern. And this means that we are looking for this number 2 breakdown right here to lead to this number 3 consolidation excuse me, pattern to this number 4 breakdown. So here we are, kind of looking for this move right here. Okay, and we're looking for this breakdown. We've already had our number 1 here. And so we have our number 1 peak, number 2 flag. We're looking for this breakdown or a break up above this level. So we get above this level here, and we're going to be looking at a rally phase again. But if we're actually looking for this breakdown to get below this level, I'll draw this as a line. Oop. Draw this as a line here. And let's just make it kind of purple. So if we get below this 90,570 level, right around this area, 572 is what it says, then we get a breakdown into this low, probably 80 to 82,000. Consolidate around this area and then break down maybe back to 68,000. So we're looking at a pretty strong potential correction move here for Bitcoin, potentially wiping out this entire move. Now, as an interesting concept, let's take a look here on the monthly. See if we see anything that stands out. Rally, 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 rally. I don't see anything that really stands out. I mean, we do have this huge move to the upside and we've stalled. It looks like about let's check this extension from roughly here to here to here. 1.382, 1.0. Yeah, so we've really we've really overextended up here to the upside. I'm not saying that that's, a horrible thing, but this 1.0 level would normally be about where I would expect things to stall. That's where I expect Bitcoin to come back down to. But this Trump rally has really pushed it, you know, about 38%, 33% higher than I expected, stalling out at 1.382, a psychological $100,000 level. It does not, it does not show a lot of strength to me. It shows that, we're going to potentially move downward. It shows that we're going to potentially see this breakdown in price. And I think we need to just stay cautious here. I think that's the ultimate message, is to stay cautious through this rally. If you caught this, fantastic. If you can move and protect your assets a bit here from a breakdown, I mean, this could be, if this plays out, this could be a 20, 30% decrease in Bitcoin over the next month or so. And like I said, it's just going to be a matter of playing out. Bitcoin is down to 94,000, almost just below 95,000 right now, down $1,000. But let's see what happens, because we need to get below this 90,750 level if we're going to see any real big breakdown. Okay, going back to the SPY here. Oh, last thing I want to point out was here, gold should be moving into a momentum rally phase in carryover. So gold and silver back over here should be moving into some type of momentum rally phase, potentially trying to rally upward. We come back last year, we got a momentum rally and then a blank pattern and then a top pattern on Thursday. So I think we could be looking at a pretty solid rally phase in metals. I would urge you guys to, maybe try to play this flagging move right here, where gold could end up getting below this level here, 2640, and then rallying up into the 2720 area. That would be an 80 to 90% move. So you'd be looking at, I'll highlight this as green. you'd be looking at a bit of volatility to the downside here, which happens near flag formations, and then rolling back to the upside. Okay, guys, that's it for now. Talk to you later.